Hey, accounting students. This is a video lecture that will walk you through the chapter 13 online Excel homework problem. And just like previous online Excel homework problems, you have 3 attempts to submit the whole homework assignment. In our case, it's just one spreadsheet. And within each attempt, you can use that check my work button 3 times. So let's get into the facts. We're given that a company is insolvent, meaning that they don't have enough assets to pay off their liabilities. But we gotta divide up the liabilities into 3 different groups. One would be secured creditors. Here they're owed 155,000. Your numbers are going to maybe be different than mine, yeah, because this is an algorithmic problem. But when we start entering the formulas, the formula should be very similar to what I'm entering. Okay, so that's the amount owed to secured creditors, 155. And then the assets that can be used to pay off those creditors are 210. So there's excess value there that now can be used to pay off the unsecured creditors. But the second group that gets their money is not the unsecured creditors, but partially secured creditors. And here they're owed $500,000, but there's only 385,000 of assets to pay off those creditors. So there's a shortage here, and that difference looks like it's 115,000 will join the unsecured creditors down here, this accounts payable. And we have other assets, remaining assets of 305,000 to utilize to pay off those unsecured creditors. Now within the unsecured creditors, there's 2 groups. This first one with priority gets paid off first before the unsecured that without priority. So if you remember in your reading of chapter 13, some examples of unsecured creditors that have priority, you can't miss the income taxes or taxes owed by our company. Yeah, they got to be paid off. And also some employees, up to a certain dollar limit of back wages or salaries, also have a priority. So the 2 main questions we need to figure out here, the requirements. Our company owes $8,000 of accounts payable. That's included in this bottom number here, this 395 unsecured. So the question is, how much are they going to get? And then in B, well, let me show you. Remember in our reading, we had to come out with this percentage over here, yeah, to figure out and multiply by the unsecured creditors that don't have any priority to figure out how much per dollar they're going to get back. And in a way, this table here is kind of the information that's given to us, or we got to figure out in a different format. I wish we were able to do a spreadsheet like this. Very useful, especially in terms of tracking transactions during this period of time that we're trying to close out the company. Okay, so we're trying to eventually get to this percentage in our case here, and multiplied by that $8,000 to figure out how much is going to go to that one creditor. In requirement B, we're told there's 110,000 note payable that we owe that has some secured interest of 90,000. This 110 is included in this partially secured liabilities of 500,000. This 90,000 of assets are inside of this assets pledged with partially secured creditors is 385 here, yeah. Okay, so again, we're going to see these amounts here, 8, 110, 90, already set up in our spreadsheets. So we don't need to type in those numbers, but they're already included in these numbers up here. Okay, let's get into our spreadsheet. We know that we have to enter everything as a formula. Okay, no typing in numbers. And here's our check my work button. You can use 3 times per submission attempt. So when you want to submit and continue with your second submission if needed, you go back to this screen over here, yeah? So let's close this window. And of course, we know how to get back into our menu. Yeah. Okay, so same numbers over here, but again, the labeling is a little bit confusing. So this 8,000 of accounts payable is already included in this 395,000 figure. And again, we're going to be using this 8,000 as described way down over here. Same thing with this 100, 10,000. I believe we were told also, was it 90,000 of assets, 85,000 of assets, partially securing this amount of 110,000 of liabilities. Again, these two amounts here are inside of these two amounts over here, these two here. Yeah? Okay, so we don't duplicate it. Okay, so again, instruction A, a company owes the following unsecured liabilities. Again, that's this 8,000 here without priority. Okay, so they're last in line to collect. So how much of this can the creditor collect? So we're assuming already the secured creditors got paid off. Now we need to figure out how much assets are left over. So that's what this first formula is going to calculate. So let's start off the formula, equal, and the main assets left over. Here, assets not pledged, 305,000. But then we still have some extra assets after paying off the secured creditors. So let's add that in, plus, I need a plus here, not equal, plus, and then add in these assets, but we're minusing out the secured creditors here. And the leftovers now can join these assets for a total of 360,000. Okay, so now with that 360, we got to pay off the unsecured creditors, of which, let's see, we have unsecured liabilities with priority. They get paid off first, this 207. Notice when I click on this cell, there's a notation here. Formula must return a negative. So let's already start off with a negative. And I'm going to minus out the priority creditors here. And take a total. I think I can do Alt equal and enter. So now we have left over 153,000 of assets to pay off the unsecured creditors that don't have any priority. So that's the accounts payable. So let's grab that number. Accounts payable. Not this 8. Yeah, this 8 is already included in this 395. And then to that 395, we have to add in the amount still owing to the partially secured creditors. So let's get that amount in. So that's the liabilities owed to them, partially secured liabilities, and we minus out the assets they already got, this 385, leaving us another 115,000 to be paid off. So the accounts payable plus the remaining amount owed to partially secured creditors equal 510,000 we owe those unsecured creditors. And how much do you have to pay them off? Only 153,000. So here in this line 28, it's not really clear, but we're told to again, or it's implied, to figure out this percentage here. That's the remaining assets divided by the unsecured liabilities. So let's put that in here, if I can get to my spreadsheet. Okay, so here, that's the remaining assets, 153, divided by the liabilities that haven't been paid off yet. And when I enter it, you notice, oh, nice round 30%. Yeah, it's already formatted to show a percent format, 2 decimal places. So all we need to do now is multiply 8,000 by 30%. Not this 8,000, right? You don't type in 8,000 in your formula, but it's already entered for us in a cell above. Yeah, so let's grab that 8,000 up here and multiply it by that 30%. And enter. So even though they're owed 8,000, this creditor is only going to collect $2,400. Let's do requirement B. The company owes the bank 110. That bank is unsecured. So I take it back. It's partially secured. Of this 110, they got back 85 with this collateral property. So that leaves, what's that? 200. The difference here, I can't do it in my head. I'm an accountant and I cannot do this kind of math in my head. The difference here is still owed to them, where they'll collect 30% of it, plus this 85 they've already collected, yeah? Okay, so let's put in the note that they were owed 110, and the property that they can collect on, this 85. Let me try that again. I want to make sure I'm entering it as either positive or negative. I don't see enter negative, yeah, so it's going to be positive here. That 85, and then the difference still needs to be paid off. So I'll take the difference. See, I can't do that in my head. 25,000 still owing. So the total that the bank is going to receive is this 85 plus a percentage of this 25, 30% of this 25,000. So let's enter that. Enter it in the correct cell. Equal 85 plus, let's see, 25 times 30%. Okay, 92,500 out of the total 110 that was owed to the bank. So let's check our work here. And I don't have it perfect. So let's see what's wrong here. Everything except this last one here. Let me check out the answer key. The solution to get a good, well, not a good formula, but the formula they want over here should result in the same 92,500. Remember, I got this by adding in this 85,000 and then taking the 25,000 times 30%, yeah? The 25,000 times 30% is correct according to the answer key, but the way they want to get this 85,000 that was first paid off is not grabbing the 85,000. They want you to take the difference between this 110 and 25, which to me is not logical, but that's what the formula is asking for getting points for this. Yeah, so let's do that. Yeah, it's 110 minus this 25 to get the 85, and then the remaining 25 times the 30% over here. So let's enter that here. Okay, not the best formula, but let's start it anyway. So that's equal, and we'll put that difference in parentheses here, is 110 note owing minus what they didn't get, which you cannot really get until you know how much they got, this 85, but that's how we get that 85, taking the difference here, to which we add the remaining 25,000 times the 30%. Remember the answer before that, 92.5? Still the same, but let's check our work again. Why is it saying I have, I have it correct here. Same answer, but really bad formula, yeah, I think. So use that formula. Again, taking the difference between this amount owing and the amount that is unsecured to get that amount that got paid off, which was really given to us, yeah, in the facts. Then the amount it still need to collect times the percentage they'll collect on this 30%, and you'll get this number. Okay, so that's the only problem I want to assign for this chapter 13. Yeah, so I'll see you in our next chapter.